In this video, we'll discuss how to overcome the effects of major disruptions to medium and large businesses during the M&A process. If the financial performance of a business is temporarily impacted by a period of low performance, unless the true underlying performance can be presented, the business may not be saleable or achieve fair value until the interruption has worked its way into history in the financial results. Without making adjustments, buyers may be unable to determine the true underlying level of maintainable earnings for the business and either withdraw confused or propose pricing that is based on artificially low performance, making it untenable for the seller. In this video, we'll explain how to make extraordinary normalisation adjustments while maintaining the integrity of the business presentation during the sale process. Before we do, here is our snapshot view of the current mid-market for M&A transactions. DMA currently has about 60 mid-market clients worth over $300 million. Although media reports highlight industries drastically impacted, there are many more industries that are trading on largely as usual, which is not newsworthy. Only a handful of our clients have been negatively impacted. Whether the business is impacted or not depends entirely on the industry they're in. The grass is still growing and needs to be mown, so equipment sales are continuing. Motorists and other machinery is still operating, so petrochemical plants are still operating and need to be maintained. The lights still need to come on. General industry is still operating. Construction sites are still operating. Mining is continuing. Food processing plants and breweries are still producing. All these need to be operated, supplied and maintained. Many of our clients provide support services to these sectors and other essential services. There are also businesses in transport, logistics, IT, road maintenance. The list continues. Yes, businesses providing hospitality, tourism, associated services are strongly impacted. However, there are many more businesses operating in the mid-market sector that are not directly impacted. DMA has seen no active deals fall over during the current disruption. However, buyers are naturally cautious and many have requested a pause while the overall economic effects flow through and are stabilised in case anything unexpected happens. We suggest M&A advisors conduct an assessment of their client portfolios and determine the extent to which each client is impacted, along with their target purchaser markets. You may be surprised, as we were, to learn that despite headlines and images of empty streets and venues, and a halt to international travel and face-to-face meetings, business is continuing largely as usual for many of them. For those who do have or will have disruption of performance, M&A advisors can take up normalisation adjustments to compensate for the temporary interruption to activities. Here is a strategy we will be adopting, which has already proven to be successful in past situations. DMA took a business to market a couple of years ago after it had produced a year's worth of contaminated product and had other impacts of poor management decisions. Based on the information from our clients, we were able to analyse and account for the effects of these events on their sales, margins, restoration costs, etc. to remodel their results. The effects could be calculated and normalised for. The business was then taken to market and acquired by an ASX listed company following the completion of their normal due diligence process. We'll run through the case study with you now. So here is that company with its name changed and some of the numbers changed a little to protect confidentiality. This is the unadjusted set of accounts, the financial statements and the year-to-date. Quite a long set. So then there are the standard adjustments made, an unusually large number in this particular case. And the normalised results are the sum of those two worksheets, and the summary would normally go into the IM. As you can see, the effect of the extraordinary item showing not a pretty bottom line. The extraordinary event items are described, documented, and then adjusted for on this worksheet, and the new normalised is taking into account the extraordinary event. The summary of that is what goes into the information memorandum showing the actual results normalised including the management accounts for the year to date, you'll see quite a different bottom line. To show that graphically, you'll see here we've presented the results without the extraordinary item, net loss there, sales line declining, reduced, and also a negative EBIT. With the adjustments made, you'll see the sales trend line continuing as it had been, and the EBIT line continuing around the same level. These over here we've put in for this example, showing the difference between the two and how it's affected the results that were presented. Pricing analysis page, which is what some people would call evaluation. Without that adjustment made, you'll see a negative EBIT, and applying multiples, you would come up with an enterprise value here, unsatisfactory clearly, and of course the underlying net tangible assets would set a floor value for that business. Over here with this specific extraordinary item, you will see the change in EBIT, EBITDA, and a multiple applied. There's a range there. So that's the effect of taking it to the market that way. We've also prepared an example showing a disruption within the current 12-month trading period. So we've extended the results out to show monthly accounts, management accounts typically. The adjustments we would make are now down into monthly. Any reallocations that we would make between any line items, and then a normalised result as we normally would prepare it. We've now shown you in this example any specific adjustments relating to an unusual or an extraordinary event. These are all documented as they affect each individual month. And we've factored in an adjustment for what could be a bad debt due to the abnormal event some months after the initial shock. The normalised results now take into account the extra adjustments, and the summary you'll see showing the sales trend continuing. This is just an example. The charts, you'll see here the monthly results. You'll see the actual results, and what we've done here with information from the owner showing what they've lost by way of sales, and the gross profit adjusted for that. Here is without the adjustment extraordinary item, you'll see the sales for the current period lower, and you'll see the EBIT lower, the trading performance showing lower. Now with the adjustments made, the extraordinary item, you'll see the sales trend had continued based on information that the owner would be able to provide and justify. The EBIT line was continuing on as it had been. And over here you can see the effect of adding the normalisation adjustments due to the extraordinary item. The effect on the pricing, without that extraordinary adjustment, you would see the value decrease in this example, and over here you'll see the notional value increasing. Now this doesn't mean that an owner should expect to receive full payment based on a notional profit. However, what it does is it gives us the ability to negotiate into a transaction a floor value based on actual performance, with provision to build in an earn-out or a further payment in a future period, for example the 12-month trading post-completion, that takes into account an allowance for the trend in the business performance to resume. So at least it provides the mechanism whereby the owner can achieve fair value going forward for their business, and the sale to continue on, rather than waiting until, say, another 2 or 3 years trading history had to be built. So DMA already prepares normalisation worksheets like this for every client. The process already allows for any non-recurring or abnormal events to be documented and eliminated. The financial preparation process is documented in a procedure covering the equivalent of 15 pages, leaving nothing to chance. It's a smooth and straightforward process. We hope this video assists business owners and their M&A advisors in the months ahead as we together overcome the effects of the current market disruption and return to normality as quickly as possible. Stay safe. Bye for now.